Hello, I hope you are doing well. This is Huram will be with you with the global economic outlook in the week ahead, which is going to be the week 25 in 2025. As always, let's first check what happened last week to review what we had as the data and geopolitical tensions, and then we can go ahead and see what we will have in the week ahead and what we can expect from the financial markets. Last week, it was GDP and mostly inflation numbers. GDP from the Japan was flat, unlike 0.2% expected fall for the first quarter. In UK, GDP was negative, while the unemployment rate also increased to 4.6%. In United States, inflation had some progress, and we saw that the inflation slightly decreased. Both CPI and core CPI increased by only 0.1%, while the PPI also fell and shows that generally the inflation is under control. However, that was mostly thanks to energy prices. Anyway, because if you go to more detail and check the service sector, you can see that the service inflation is uh, somehow still high, and we can say that inflation is should be much more considered, as the Federal Reserve also Federal Reserve also is talking about that we have to watch more carefully about the inflation progress. If a week ended last week with the geopolitical increasing very rapidly geopolitical tensions in the Middle East, with the Israel attack into Iran, and Islamic Republic in Iran also answered this attack with the missile attacks. Generally, the tensions increased higher in the Middle East. That was the reason that we saw that the oil price increased from 66 to around $74. Even thought that was that closed lower around $72 WTI with some correction. Oil energy price increased. We could see that the same trend in for the gold price. We saw that the gold price increased at the same time. The risky market fell a little bit, same thing that happened, the same trend that happened in the stock markets. Generally, not just in the United States, and other countries as well, and the cryptocurrencies. For the week ahead, while these geopolitical tensions still continue, and we can see these geopolitical tensions to be continued in the Middle East. At the same time, we have very important data to watch, especially the central banks meetings. Before watching the central banks and checking the central banks meetings, let me say that in the week ahead, we will have some data, including industrial production and retail sales from China. We are expecting to see some positive numbers there. We will see the retail sales numbers. We have to watch the retail sales numbers in the United States, where we expect to see that the retail sales to fall by 0.5%. We can have the inflation numbers in United Kingdom the day right before the BOE meeting, and we are expecting to see that inflation slightly to decrease, and see that generally the inflation to have some correction from 3.8% to 3.7%, while the retail sales expected also to show some progress, but weaker than previous, comparing with the year ago. We will have also consumer price index or inflation numbers for May from Eurozone, and we expect to see the flat data with 2.3% unchanged CPI in Eurozone. In United States also, we will have the housing market data, where we expect to see the both new construction starts and also the permits. Where are the yep here the permits and housing start, both of them to increase slightly weaker compared with the previous month. But as mentioned, the focus will be on central banks meetings. Let's start with the Friday and go back to the Monday. On Friday, we will have the central bank meeting in China, where we expect to see the People Bank of China to hold the rates at 3% for 1 year prime rates, and 5-year prime rates at 3.5%. We know that the previous month, PBOC, they cut the rates by 0.1% or 10 basis points. In this meeting, we expect to see we expect to see unchanged in the policies and interest rates. We had inflation data from China previous week, and we saw the inflation is fell by 0.1%, while the market was expecting a little bit worse number by 0.2% fall, but still the inflation is a negative in China, and we have to watch that more consistently and more closely. At the same day, we will have the inflation numbers from Japan, while on Monday also we have the central bank meeting, but the inflation numbers in Japan also expected to see slightly progress from 3.5% to 3.6%, but generally the inflation should be slightly high and continue these high numbers and support the Monday's meeting. This we'll talk later. On Thursday, we will have the central bank meeting in UK, where we expect to see the BOE holding the rate at 4.25%, but the thing is that with the considering the weaker economic growth and also 4.6% unemployment rate that we had previous week, consistent that support the rate cuts, these numbers, but still the market is still expecting to see the 4.25% unchanged inflation rate while interest rate, while because the thing is that with the new budget that the Labour Party had which they have to support they run the government right now. With the new budget, the inflation is so risky to increase again. That's why they expect the central bank to hold the current rate. But at the same time, as mentioned, inflation is not such a worry right now, but the economic growth is really worrying, is very concerned. That's why the seven members of the MPC, they expect to vote for, in general expectations, to vote for holding the rates, and two members to vote for rate cuts. But as I personally expect to see is for these two votes for rate cut to increase to four rate cuts votes, and we will have the five votes for holding the current rate. But generally, anyway, most probably they will not cut the rates, but the number of the votings for rate cut will increase, which means that the more dovish policies in the central bank in United Kingdom, and that can be negative for British pound and positive for UK stock markets. In National Bank of Swiss also, we expect to see 25 basis point rate cut from 0.25% to 0%. In United Kingdom on Wednesday, where the market focus will be on that, in a week ahead, the United Kingdom we expect to see holding the current rate. There is almost no doubt on this policy. Now the question is when we will see the Federal Reserve to start the rate cut. That will be the main question. In economic expectations also, we don't expect to see any changes in the dot plots, economic expectations. In none of them, we don't probably see any changes in the policies or interest rates and even the expectations. But the thing is that what we expect to see is to find any sign from when the Federal Reserve will start the rate cut. And even not just on the Wednesday, on Thursday and Friday, where we will have a more speeches from the Fed members, people or the policy market participants and investors, they will be looking for more reasons and more signs what Federal Reserve is going to do. Any dovish sign will support the stock market and put the pressure on the US dollar and vice versa. But we expect to see more cautious policies and comments and statements from Federal Reserve, which means slightly this tone can slightly support the US dollar index and put the pressure on the stock markets. We will have the interest rate decision on Monday in China as well, where we expect to see the Bank of in Japan as well, sorry, where we expect to see the Bank of Japan to hold the current rate at 0.5%, but still there's a 50%, the 40% chance, 60% for holding the rates and 40% for cut rate hike chance. But still, there's a more chance for holding the current rate. But we will have most probably more sign that the Japanese central bank will increase the rates next meeting. But still, as mentioned, there's a 40% chance of rate hike in this meeting as well. That's what we expect in the economic calendar. Let's go and see the charts and see how these expected data can affect the markets. In the US dollar index chart, as you can see in the chart, the dollar index, while it's still in downtrend, the candles moved above the downward trend line, which means that the downward or downtrend is losing the steam, which means that we can probably see some correction technically, fundamentally also with increasing the risks in the Middle East and some other countries around China, in Taiwan, between the Russia and Ukraine, still the tensions continues. All these will increase the demand of the safe haven of US dollar index, which means that the US dollar can continue slightly higher this week. We can see that between 98 and 100 mark, most probably during the week ahead. That cannot change still, the positive dollar cannot change the overall outlook for the gold, and gold still, after printing a new higher high, uh, gold is still positive, and with ongoing geopolitical tensions, with ongoing risks in the market, with the VIX above 20, we expect to see this trend is continue, even if we have some correction, but still the overall trend of the gold is still positive, and we can see the price going further. About the oil market, OPEC Plus increased the output with 411,000 more production in May, June, and July. We will see almost 30% back of the oil cut that we had back in 2022. So that's why the markets could be balanced, even though the Iranian oil, even if Iranian oil gets out of the market, but still we will have the replacement production from most probably Saudi Arabia and most of the OPEC members, especially the Saudi Arabia, United Arab Emirates, and Russia. That means that the market shouldn't be too much worried about the supply, while the demand is not such a big. The demand is not such a brilliant there. So the first geopolitical tensions reaction in the market was positive, but if you're look at the market more logically, we can say that, okay, that cannot change too much in the market. So the oil price will be $66 and $72 in the week ahead. We don't see any big jump unless if the tensions in the Middle East gets higher. But that's the only chance, which is low chance for that. Checking further about the stock markets, doesn't matter for S&P 500, Nasdaq, and Dow Jones. For all of them, we expect to see slight downtrend in the week ahead. We expected more dovish, more hawkish policies and statements from the central bank in one hand, and increasing the geopolitical risk and tensions. We will expect to see Dow Jones, Nasdaq, and S&P 500, all of these stocks to have some correction in the week ahead. 5,800 is the next target for the S&P 500, breaching under 5,800. We'll put the 5,005 and $5,200 in the spotlight. As for the cryptocurrency market, also increasing the risk in the market, we'll put the risky asset under pressure, including the cryptocurrency market. So if the Bitcoin can breach under 102 and then 100,000 US dollar, we can see now 88,000 as the next target and a downtrend for the cryptocurrency. Generally, the cryptocurrency market is under pressure. You can see here they have in the market level and market volume, and the demand for the buy positions also is getting lower. That's generally what's happening in the market and what we expect from the markets for the week ahead. If you had any other question, don't forget to write in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.